Hello, hello. I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Wednesday morning. This week flying by, folks. Pulte Group CEO Ryan Marshall getting things underway at the New York Stock Exchange. eBay CEO Jamie Iannone getting things popping over at the NASDAQ to celebrate its 30-year anniversary. We'll be talking to him very soon on Yahoo Finance. And look, and just like that, we are back to being fixated on the bond market, whether you like it or not. Investors have returned from their summer vacations on lavish private islands, suddenly more worried about the U.S. debt position and Fed independence during the era of Trump. All of this triggered in a matter of days as the court ruled President Trump overreached on enacting tariffs. The market is most acutely focused on the 30-year U.S. Treasury yield as it crept toward the important 5% level. This move, along with rising yields for overseas debt, has led to a pullback in hot tech stocks like Nvidia. Talk about a wall of late summer worry for the bulls to climb. That wall is just growing even higher. Here's what else I'm watching right now. The two tech trades that are working, Google and Apple, are getting early pops as a judge ruled Google doesn't have to sell its Chrome browser. Said D.A. Davidson analyst Gil Laurie on Google, quote, "We categorize the ruling as a parting of the clouds phenomenon for investors on the sidelines who perceive the potential ramifications of a Chrome divestiture as an overhang to the investment story." Eyes on Nvidia and other tech leaders. Market darling Nvidia enters today's session having notched 4 straight down days, which wiped off $286 billion in market cap. Big number. The sell-off has sent Nvidia's stock below the key 50-day moving average. How concerning is the move in Nvidia? We'll discuss. And tracking the U.S. shopper. Back-to-school shopping season is well underway, and we are ripping apart earnings from Macy's and Dollar Tree for consumer clues. Judging by the results out of both, consumers are still under a bit of pressure. Dollar Tree saw its same-store sales rise 6.5% on the back of strong traffic as consumers traded down. Looking at you, Target shoppers. Sales at Macy's rose slightly, but earnings came in ahead of analyst estimates. Here in my opening bid roundtable, Tim Urbinovitz, Nvidia Capital Management Chief Investment Strategist, Morning Brief Market Sunrise host Ramzan Karmeli making his opening bid debut, and Yahoo Finance senior reporter Inez Ferre. Tim, I want to get over to you here. I want to just push the Google, Apple news off to the side for a sec. We had a lot of coverage on that, but I want to lock in on what we're seeing on yields in this sell-off on tech. How concerned are you about it?
Well, Brian, it's pretty funny. We've come a long day since Liberation Day. Apparently, the market is favorable of tariffs right now. I think the concern yesterday with the court rulings, Trump's use of IEEPA, a no-go at this point. Investors don't like the fact that tariff revenue is pulling back. And we do think, Brian, this is a key risk to watch, not just for the bond market, but also for the equity market moving forward, is U.S. yields. You look at the Fed independence question, where we have the Fed potentially cutting interest rates into an environment where we still have core inflation at 3%. That, in our view, is going to put additional pressure on inflation. And what that does to the long end of the yield curve is still an unknown, but something we're watching very, very closely. Brian, it's very rare, almost non-existent, where you see the Fed cutting above this 3% level. We looked at every environment since 1970 where we've had core inflation in this 2.75 to 3.25 range. We've only seen the Fed cut 3 times in that environment. 94% of the time they either hold rates steady or they increase interest rates. So for them to be potentially cutting into this environment, we need to really be paying close attention to the long end of the yield curve.
Ramzan, we pay lip service here in the U.S. to what happens overseas in terms of bond yields. And we write a focus on the 10-year yield and overseas bond yields on the rise like it's not happening, but it is happening. What are you seeing overseas?
It is happening. And in the UK is a very good example. The 30-year bond yields, well, you're talking about 5%. They hit 5.75% here. That's the highest since 1998. And in fact, the UK faces the highest borrowing costs in the entire G7. Now, the Chancellor, or the Finance Minister, as you like to call her, Rachel Reeves, Brian, she's under immense pressure from bond investors to control government spending. And also, you talk about inflation, at the ranges that you're talking about. We've got inflation in the UK closer to 4%. And it's not just the UK. Japan, yield on its 20-year bonds, they hit their highest this century as well. So, the strains across sovereign bond markets come, on many major economies, and they are facing this challenge of managing large debts and trying to boost growth at the same time without actually causing even worse inflation. And this week, so far, get this, we've seen more than $116 billion of bond sales by governments and companies, and that figure includes a record $57.7 billion of issuance in Europe on Tuesday alone. So that's quite a number. That's quite big, and it just shows you that since 2008, since the financial crisis, governments across the world have used cheap financing to increase their amount of debt. Then we had COVID. They've had to borrow more money, and now they're facing increasing amounts of debt. In fact, the Institute of International Finance said that global debt in Q1 of this year, get this, hit $324 trillion, and they blame the main culprits. They say are China, France, and Germany. So it's not just a US problem; it's a global problem.
And there's teachable moment for our global audience. You cannot ignore the bond market. It may be complicated, but don't ignore it.
Don't ignore the bond market. It is probably the most important part of the market. Look, the fact is that, yes, we are watching bonds right now. We're watching the dollar. Those are the big things to watch for is the dollar, bonds, and then the impact on equities. Right now, we are not seeing too much of an impact on equities. I mean, like you're looking right now at the S&P 500 that's higher right now. You're looking at the NASDAQ, and investors have been buying the dip here. You also, of course, are looking at the big two stocks there, Alphabet and Apple, that are sort of driving this higher. But nonetheless, I would also watch what's been happening with gold as well, which is at record highs today again. Silver is higher again. And we just had a note out from JP Morgan saying that you should see gold prices in the long run going higher as well, especially if you have the Fed independence in question.
Tim, let me go back to you real quick before I get to Google and Apple. If Nvidia is selling off as a result of rising bond yields, it's not company specific, and I get Nvidia didn't blow it out of the water last week when it reported earnings, but are you buying the dip in Nvidia here?
Well, Brian, we really think this weakness that you're seeing in Nvidia and really the market as a whole here is seasonal. September tends to be a bit of a rougher patch for the market in general. But Brian, when we step back, we also think that there's opportunities opening up outside of just the big tech names, and specifically in small caps. We've had this relative valuation gap for a very long time here. That valuation in and of itself is not enough to really push small caps higher. But when we take a step back and we actually look at the Fed cutting into this environment where growth is very strong, Brian, we think that can provide really the relief that small caps need to finally get a bid and finally get going and catch up a bit. So we don't think necessarily you need to take your foot off the gas on the Nvidias, the tech trade, the big tech trade. We think that is going to continue just in a little bit of a seasonal weakness patch. But a lot of these other names, the smaller cap names in particular, I think there are some catalysts here that really call for some attention here as we move into the back half of the year.
I want to give a quick shout out to my colleagues, Francisco and Jen. If you're watching this right now, I know you're watching it. I think Tim's saying if you're worried about Nvidia, buy small caps. Ramzan, I want to get you on Google because I know you have an interesting EU angle on it.
Yeah, it's a different challenge that the big tech names, the US tech names, face here in Europe, especially Google and Apple. Now, remember, Google was hit with a more than €4 billion antitrust fine back in 2022. And in fact, Google has been under a 4-year ad tech investigation by the EU. But perhaps there are signs that the relationship between EU regulators and these tech giants could be easing. We're seeing reports that the EU Trade Commissioner, Maros Sefcovic, if I can get my teeth back in, he's apparently said on Monday to have made an 11th hour intervention to stop the European Commission from issuing a penalty against Google for its search advertising practices. And this is all coming as we have all these threats from US President Donald Trump about the way these tech firms are being treated and about what he will do to tariffs if he feels that big US tech names aren't treated properly.
Inez, it was amazing to me, and I've been following this, but Google stock ahead of this announcement has traded at a discount to the S&P 500, and that has been amazing to see given how far tech stocks have risen. But a lot of folks I've talked to on the street this morning suggest now that, relative discount will be unwound now that this issue is in the rearview mirror.
That's right. And you have analysts that are saying that this was an overhang on the stock, and this was the overhang that is now put to the side. So this is huge for Google, for Alphabet. This will also be good for Gemini, their product, their AI product, because they can keep sort of users within the Google Chrome ecosystem as well. And of course, this is good for Apple, as we've seen with Apple's share price, because Google pays Apple billions of dollars to be the search engine of default as well. So that's significant for both of those stocks. But I would also say that it's significant for big tech as a whole, as one of our guests earlier this morning had been pointing out as well, just because perhaps big tech or some of the other players in big tech are also watching this and thinking, okay, I have a little bit of breathing room. We have breathing room here. We are not going to be broken up. So I think that for big tech as a whole, it just sort of solidifies their position.
Tim, I don't think investors have to trade Google and Apple off of news like this. Which one are you inclined to ride? Now, I would say, of course, Apple has that event, iPhone event, likely. That is next week, so it might be another catalyst there. But you don't have to be in both these names, right?
No, Brian, and I think when you look at the Mag 7 as a whole, Alphabet has been the one that we've been most bullish on here and continue to be moving forward. You look at the discount, significant discount relative to the rest of the Mag 7 names. I think this ruling is very helpful. It removes those gray skies, if you will, gives a very clear runway on their AI ambitions. At the end of the day, companies that are going to win out on AI and search are going to be the ones that the interface the users are most comfortable with. So being able to keep Chrome here is a huge, huge win for the stock. But even outside of that, Brian, I mean, the fundamentals have looked strong. The technicals have looked very strong on this name as well. So we think this is one you continue to lean into going forward, and the valuation at these levels is an added bonus.
Tim, last word to you. I mentioned at the top of the show, focused on earnings out of Macy's and Dollar Tree this morning. I think the reaction to Macy's stock, at least to me, is really overdone. Sales barely grew. Are you fading any rallies into consumer names into your end? Given we don't have clarity yet on tariffs, that uncertainty has been ratcheted higher, and you have a consumer in the U.S. that is still under a lot of pressure.
You do, Brian. And when it comes to the consumer, we're really thinking about this in three different buckets: the low end, the mid-tier consumer, and the high end. And we think that the high end and the low end are going to continue to do pretty well, while the middle is going to struggle. You look at the low end, I mean, stocks like Dollar Tree, Walmart, we think those are going to continue to thrive, because at the end of the day, the low end consumer, yes, they're struggling and they have issues with tariffs, but there's not really anywhere else to go. They have to keep that spend up, and they're going to go to the low-cost providers like Dollar Tree, like Walmart. On the higher end, consumers that are making $100,000 or more, we think those consumers are going to continue to do well. They're in a great spot. Their incomes have been growing, their savings has been growing at high rates, their wealth is growing with stock markets continuing to hit all-time highs. So we think those stocks continue to do well. I'd put Costco into that category, where they're catering to the high end. But then that middle ground, consumers that are getting hit harder by tariffs, more discretionary purchases, I'd put Target into this category, Brian. We think those are the ones that you want to continue to avoid as we head into the back half of this year.
Gosh, I love the giant steaks I get from Costco. That's the only reason I go there. Tim, Ramzan, and Ez, y'all stuck with me for a little bit longer. Sorry in advance. Straight ahead, some McLovin being shown to McDonald stock after one Wall Street analyst had dinner with the CEO. That's a pretty cool dinner to have. And in my Stock of the Day segment, I defend old school tech play eBay from the Bears. We'll be right back. Welcome back to Opening Bid. McDonald's getting a supersized call out from Bernstein restaurant analyst Danilo Gargiulo after he met McDonald's CEO Chris Kempczinski for dinner this week. Here are the finer points of Danilo's analysis. One, he knows McDonald's will spend an incremental $40 million in marketing support this month to get the word out on its new value platform. Two, the new combo meals will be priced 15% less than individual items as McDonald's aims to reverse really weak traffic here in the U.S. And three, he says McDonald's rivals are unlikely to unveil similar deals because they can't, which is ultimately good for McDonald's. Pays to be big. All right, for my stock of the day, I want to start with three questions to see if you can guess the company. I don't know if you can. First, Yahoo Finance data shows this company's stock trading on a forward P ratio of 15.9 times. That's a discount to the S&P 500's 22 times multiple. Second, the company went public on September 24th, 1998, so we are coming up on a public company birthday of sorts. And lastly, it has seen 10 straight quarters of double-digit sales gains in its collectibles business, powered by demand for sports cards and Pokemon cards. Interesting. No way you're getting this, so I will just give you the company. That is eBay. I've been pleasantly surprised by the company's results this year. Margins have improved, and sources on the street tell me the business is moving beyond an inflection point. So is it time to play this old school tech name into year end? My panel for today, Tim Urbinowitz, Ramzan Karmeli, and Inez Ferre, y'all are still with me. Tim, want to go over to you. Any interest in eBay here?
Well, I think there's a couple positives, Brian. You hit on the valuation. That's always a good thing when we see good news for the stock. It acts as a springboard, helping us propel higher. I think the positives here are the growth in the advertising business, which was very encouraging, and then clearly the increased interest from consumers on collectibles, things like Pokemon cards, trading cards. I'm seeing that at home with my kids. They're all over eBay looking for specific baseball cards. So I think that's encouraging. I don't think it's one of those super high growth stories that we get excited about. But overall, given the valuation and the encouraging growth, I think this is a name that you could get into.
And as I was considering going on eBay looking for a Labubu. Now, the results from Labubu for now didn't show up in eBay's last quarter, more trading cards, but hey, I'm intrigued.
Yeah, that's right. Look, eBay touched all-time highs over the summer. The stock did come down a bit because of that de minimis loophole, the under $800 of imports, that loophole that was taken away, that the tariffs are still now applicable. But look, the stock has done well this year. It's up 44%. I'm impressed with all of their AI initiatives, AI tools for sellers, this AI personalization also that they have been leaning into to sort of mimic the experience of being on social media, on TikTok, on Instagram. I think that there's a lot of tech behind a company like this. And if you take a look at what how the street is rating it, you are seeing 10 buys, 21 holds, and 3 sells. So those that own the stock, I mean, the majority of the analysts on the street have a hold on this.
Ramzan, an important point that Inez brought up on eBay. The stock took a hit on the de minimis news. And you take some time, you read some of the small business blogs, some of the hobbyist blogs. A lot of these folks sell items on eBay. This has been an early headache. So I am a little concerned how sales might shape up for the back half of the year.
That is a big concern. And, eBay, like many other e-commerce companies, are pretty reliant on low-cost shipping and selling goods under $800. And they're going to be hurt by this. There's no doubt about it. And eBay shares, I think, fell 6% last week in total in the run-up to the deadline. eBay shares, they are up a lot. We have said that this year. But the recent sell-off could be a bit of a worry. But Brian, please don't buy Labubu doll. You're better than that.
No, come on. Ramzan, how many of these do you have? Come on, let's share with the global audience. I know you had a couple of these. Come on.
None.
Tim, how about your kids?
Never.
I honestly, I think it's just like only the second or third time I've heard of them. Thankfully, we have none.
Inez, I know you have 5. Come on.
No, none. 0.
None. Wow. Okay, I'm going to be the only one. I will get one, and I will bring it onto the show and follow up. All right. For more on eBay, stay tuned.
But Brian, don't buy a fake.
Don't buy a fake. I will not. We will take this offline, Ramzan. You help me.
They're doing around. They're doing the rounds.
I know. They only come half stuffed. All right. For more on eBay, stay tuned for Market Catalyst. Our very own Ali Canal is speaking with the company's CEO at 10:30 a.m. Eastern. You don't want to miss it. Maybe she'll ask about Labubu. If she doesn't, I'll ask the guy because I'm going to see him at the NASDAQ. All right. It's time now for my question of the day. Is the sell-off in Nvidia signaling a more treacherous move lower in the broader stock market? Tim, I want to go back to you on this one. Nvidia, it's more than an AI trade. It's such a huge part of the S&P 500. And if this stock is selling off, at what point does it cause other stocks that have rallied this year in different sectors to sell off?
Well, it's critically important, Brian. I mean, we put Nvidia earnings day up there with the Fed in terms of importance for the broader market. I mean, the AI trade has driven so much of this rally over the last year. It needs to continue. I think overall, again, we're still just seeing some seasonal weakness. We got to overbought levels, and we're coming off those a little bit. But we need to focus on the demand trends, and the demand trends longer term are extremely favorable for the stock. Anytime you have a situation where there's more demand than supply, we think that's long-term bullish. And that's before, Brian, we open China back up. to Nvidia, which we think opens up even more. That said, I mean, again, with the U.S. market as a whole, with the valuation, with where things are heading, we do think it is important to look other places. We talked about small caps. We also put international equities in that boat, just given the trajectory that we've seen from the dollar and the continued outlook there. When you look at when international developed equities outperform the U.S., they outperform 88% of the time when the dollar is falling, and EFA outperforms by an average of 11% in those years when the dollar is falling. Emerging markets, that ups to about 16% per year. So we don't think there's any long-term headwinds with the stock, but we do think it makes sense now to look elsewhere, and that includes small caps as well as international.
And as I find it so interesting, it always amazes me how interconnected markets are. You have Nvidia selling off, yields rising, and then you mentioned gold at the top of the show. It's almost hard to have all those working in unison, all moving higher.
Yeah, it's difficult to have those working in unison, and otherwise it would just be everything straight up and to the right all the time, and markets don't work like that. However, as a point was made earlier, we are in a period of it's a seasonally weak month, so we're expecting that. We're expecting more volatility this month and next month. But I mean, when you talk about a stock like Nvidia, we have seen investors buying the dip over and over on the stock. And if you take a look, I mentioned earlier the Wall Street recommendations on eBay. Take a look at this one, 72 buy. Wall Street analysts have a 72 buy recommendation.
Put a sell rating on Nvidia at your own risk. I mean, that's
right.
Who's doing that?
I don't know, but you do have one sell on there, but the majority, the overwhelming majority have a buy on this, 7 holds.
Ramzan, last word to you here. How important, is the Nvidia trade to oversee as investors? I think, of course, Nvidia is a global company, but I think it's so U.S. focused. It's been such a U.S. focused story, Nvidia.
It might seem like a US-focused story, but the ramifications of a price move in Nvidia stock are felt everywhere across the globe. It's such an important company, for over $4 trillion company, and it clearly has a big impact. And just on, whether we think we're worried about the S&P and whether we're reaching a bubble, we've had lots of brokers very recently up their targets for the S&P. Just last week, Evercore ISI, they were talking about 7,750 points at the end of by the end of 2026, and this is all down to that they believe that AI is going to drive the markets forward. So a lot of these brokers do believe in Nvidia, and as Ines said, no one, one person is betting against Nvidia, but 72 brokers aren't.
Really great chat. I encourage you to go on and look around for some Labubu, friends. I'm not opposed to it. There's a lot of good options out there. But again, a big thank you to my opening bid roundtable of Tim Rabinowitz, Ramzan Karmeli, and Inez Ferre. Really, really enjoyed this chat. All right, here's my forward-looking thought of the day for you, and it's a short one. Markets are interconnected, as we've been talking about all show long. You cannot sit back and ignore what happens in the bond market because it's confusing and think it means nothing to stocks. That's the wrong mindset, people. What happens in the bond market is of great importance to stocks. Learn about this market and do it now, and learn about it by going to Yahoo Finance. Coming up, Ali Cannell has you covered for Market Catalyst. She'll have a big chat with eBay CEO Jamie Iannone. Don't go anywhere.